Welcome to the AACFB's 2023 Meet the Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I'll be your host. Our presenters today are Stuart Warba and Robert James from Gulf Coast Business Credit. Gulf Coast Business Credit is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Before I introduce Stuart and Robert, I'd like to go over few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit your questions in the box and they should be answered by the end of the webinar. Please observe the chat box for the communication between attendees. The entire webinar should take no more than 30 to 45 minutes. And for those of you who'd like to review it at a later date, it will be posted on the 2023 Meet the Funder page of the website, and it will be emailed out to the membership. At this time, I'd like to turn it over to Stuart and Robert. It is all yours.
Hello, everybody, and thank you for joining us on the webinar for the AACFB. My name is Robert James. We thank you all for joining us today. And as you can see by the front page there, the theme of the webinar today is over and over and over again. And what we mean by that is money to you guys. And Stu will talk a little bit more about that here in a few minutes. But obviously, as we all know, when you're talking about sales and the way of making money is speed to the sale. And that's what we always talk about at the office, speed to the sale. So Stu and I, if you ever need us at nights, weekends to do evening calls, if you need to call us as a referral source over a deal, please do. We're here to talk to you. We want to learn about the deal and see if we can't help out and get that thing funded for you. So next slide, please. So the agenda for today, obviously, we're going to talk a little bit about GCBC, and that is our branch. It's Gulf Coast Business Credit. We're going to go over a little bit about the history of how, we got started in the factoring industry and all that good stuff. Solutions on how we can help your clients. The industries that we serve, the type of businesses that we like to see and like to factor. And then Stu will hit on the residual income, and that's where the over and over and over comes in again. The broker playbook, which just gives you some tips and things on, what we look for as a funding source and how we can help these clients. So that'll be one of the topics. The benefits of Gulf Coast Business Credit, being a bank and what we are able to offer. That's the beauty about factoring and working with Gulf Coast. And then, of course, I believe on the very last page, if you need to get a hold of us, which we hope you do, even after this webinar, please call us if you have a deal that we can take a look at. We'd be more than happy to talk to you all. So next slide, please. And here's just a little bit about Gulf Coast Business Credit. We are a factoring division and asset lending group of Gulf Coast Bank and Trust. The beauty about being part of the bank is we are FDIC regulated. So when you're talking to clients, they've probably dealt with a lot of different funding sources and so forth. Some of these funding sources, really, they're small shops. They're not able to give the availability, and sometimes they just don't do what they say. Us being part of the industry and the bank and so forth, it just adds a little trust and reliability about what we can do for your clients. And just gives them a little bit of more confidence to have faith in you, since you're the one trying to place the deal somewhere. Gulf Coast, we're one of the top working capital finance companies in the country. We've been doing this factoring business for over 21 years. I'm halfway through there. I think I'm going on 11 years here in December, and Stu's been here longer than me. So we got some longevity in the company, and that's good as well. They want to know that they're working with a well-established company and the people who represent Gulf Coast, and that would be Stu and I, who are on the call, Rashinda, of course. And as you can see there, we're not a small company. We maintain and we factor over 3,000 current clients, and that grows daily. In the factoring world, there's clients that need working capital every day, so we're closing deals daily. So of course, that number is going up, daily and monthly. We do focus on, the various industries in all the states. So we're not limited to just, I'm in Denver, for example. We do factor nationwide. So keep that in mind. We do work deals fast. We're not going to hold a deal hostage for 2 days and give, you as a referral source. We want to give you answers immediately. Your clients want to know if you can get them help, and we're going to do that for you. So if you need us, we're going to give you an answer on a deal really within, an hour if we can. We'll get Meg on the phone, who's our sales manager. I believe she might be on the call here. But we'll give you answers. So like I said, if it's a weekend and it's a serious deal and you guys are, needing to get it placed and the client's in a hurry, please reach out to us. We'll give you an answer and we'll give you the information that we would need from the client to move forward right away. So, and if we can't help, obviously you're free to take it somewhere else. But in most cases, we do help out on most deals. As you see there, we're part of the AACFB. We're the gold sponsor for 2023. And we do exhibit. We do have a booth every time there's a conference. So we're there. Stop by the booth and visit us, please. We love to see you. We love to, talk to you. We talk to a lot of you, maybe over the phone, but we love to see you face to face, obviously. So if you're ever at the shows, please stop by our booth, visit with us. And, we got a lot of goodies there at the booth. So we'd love to meet you face to face if you're at the shows. Next slide. And here's just a little bit of history of how it all got started. Gulf Coast Bank was originally founded as American Savings back in 1883. So you see the longevity of what we're talking about here. It's a well-established bank, Gulf Coast, after our CEO Guy Williams and a group of investors took over American Savings back then. We are an FDIC-insured financial bank with over $3 billion in assets and growing, as you can see with the equity on hand. And then GCB founded the factoring asset-based division in 2000. So we're over 20 years of doing this. As you can see, we're well established, we're well known in the industry. And to be honest with you, if you talk to somebody about factoring, they may have heard of Gulf Coast in the past. So we got the longevity there. Next slide, please. Okay, and this is our bread and butter, accounts receivable factoring. It's also known, if you hear people talk about AR finance, invoice factoring, or just straight up factoring, that's what it is. It's accounts receivable. We purchase the receivable from a client, and I don't want to, you can read through the thing there, but basically, people come to us when they're in need of working capital immediately. Some know that they may have, big jobs coming up down the road and so forth, and they know they're going to need a little working capital. So they look at factoring for that. Payroll's a big one. People call us literally daily and say, look, I got payroll next week of $75,000. Can you help me? Well, we got to take a look at the receivables and all that good stuff, but in most cases we do. But those are a couple of the big ones. They're trying to hire more people because they got bigger jobs coming up. They're bidding on, and they got to meet payroll. So, and when we're looking at factoring, we're really looking at the debtor and the client that they work for. I mean, we want to make sure, obviously, if we give these people a few $100,000 on their invoices, we want to make sure we're getting paid back. So of course we have to look at the debtor, who's going to be paying that invoice back at the end of the day. We do a little bit based on the client signing up, but in reality, we really want to know who that invoice is being paid by. The biggest risk in factoring is fraud. So we just need to make sure everything's on the up and up, and obviously who we're doing business with. The next one down is asset-based lending. As you can see, if they don't want to factor receivables, we have other options for them as well. As you can see, the credit facility is $500,000 to $7 million. And this is for, inventory. They may be sitting on product, that they still have, that they need a little money on. Of course, we would need to look at the equipment, appraise it to see what, type of money we can give them on it and really what it's worth. Same with their equipment, they may have farm equipment, trucks and trailers, oil field equipment that they want, funded on. Of course, we're going to have to take a look at that and again, get the appraisal value on it. And the same with real estate. You guys all know about real estate. We'll just have to take a look at it and see really what it's worth. But our credit facilities, we don't have any really financial covenants. Even though we're a bank, we're doing factoring. So it's different than like a normal loan from a bank, I guess, where they're going to be wanting the client to hit certain thresholds and financial obligations. As a factoring division, we really don't look at that as much. And that's the reason a lot of people like to factor as well, instead of going to their bank just to get a normal line of credit or so forth, because there's less constraints on them as a business owner. Next page. Oh, wait a minute. Many of these. Oh, just the very bottom one on our credit facilities. We really don't have a lot of upfront fees, and I know a lot of companies out there do, and they're hidden. Based on our credit facility and the amount that we are going to fund a client, we might look at getting a deposit, and that's for closing docs. And the reason we do that is obviously everybody's putting work into the deal. We don't want to get down to the finish line and have the client say, oh, forget it. And we put hours and hours of work in it and then got closing docs out to them. So really, that's really the only upfront cost to them. Other than that, it would just be the normal, whatever we charge them on rate and what they factor. So you see the asset-based part of it there, excuse me. And we also have a SBA division. We have a lot of different divisions, and I know a lot of you here, clients call you and they have different needs. If SBA pops up, of course, just keep that in mind that we have that as well. Next. The next one is called a ledgered line of credit. And in a nutshell, it's factoring. But this one would go to underwriter to see if we would need to do a ledgered line. And it's basically a client with a lot of invoices, possibly different size amounts of invoices, but the backup documentation, it just may not be good. They may not have signed off field tickets or something. So we would look at a ledgered line a little differently compared to a normal factoring arrangement. But at 99% of the time, the slide before it's going to be a normal factoring arrangement, and it's not going to matter to you, excuse me, when you send that over. Underwriting will deem if that's what we need to do with the ledgered line. The bottom part there on industry partners, we have partners that we do purchase order finance with. So you may have a client that calls you and says, look, my client, they have a big order from, I don't know, Home Depot for fans, and they need 20,000 fans, but they just don't have the upfront capital to obviously go and get the fans and get those to Home Depot. So they'll look for a purchase order finance company to do that. We do have partners that do that for us. And again, if you have somebody that needs that, please call us, because the companies that we partner with for that, we trust them. They know us. So we know what we're going to get, reliability from them. So please call us if you have any purchase order needs. Equipment financing, that's a big one nowadays. We do all types of equipment. I mean, oil field equipment, trailers for trucks. It could be software. It could be, printing machines, just any type of machinery or equipment that somebody needs. We can do that. And we actually have KLC, who, is part of Gulf Coast now over the last few months. So we do that in-house. That would come directly to us, Stu or I. So if you do have an equipment finance, it would still run through Stu and I. So let us talk to the client. You know, we want to find out what type of equipment they have. We'll get them the application and all that good stuff and collect the documentation. But that's kind of, you know, an in-house deal that we can get that done for them. So keep that in mind as you hear equipment financing. Next, please. And here is just some of the industries that we serve. If you, that we take care of and factor. If there's some on this list that you're doing business with now, give us a holler. But as you can see, the big one for us, really the top three: transportation, you know, the truck driver that has one truck, you know, 30 trucks hauling freight up and down the highway. We're all over those ones. We factor them quick. We can get them funded quick. Second one is staffing companies, temp staffing. You know, think if you're of a staffing company, either staffing, nursing, oil fields, in the field, janitorial stuff like that. So we do temporary staffing factoring. The oil and gas industry is big. We have a few, most of them in Texas. So we do a lot of oil and gas service companies and so forth. But again, it's nationwide. So I don't care where the client is. If they have a need, we can help. But you see it: service providers, manufacturers, distributors, government, wholesale, technology. We do it all. And what I tell a lot of my referral sources is, just give me a call. I'll pick up the call. We'll talk about it. If we can't help, I'll tell you on the phone. You know, I don't want to waste your time. I know you're busy. You know, it's off to the next deal. So I just tell them, run it by me first before you tell a client no on anything. I don't care what type of industry it is. You know, let us look at it first, because we do have many avenues where we can send these clients to help them out. So just give us a holler first, please. The next slide. I think Stu wants to talk to you on this one. Stu's good with, he has a lot of referral sources, as I do. And I know he pays out, we pay out a lot of commissions to these folks for referring deals. So Stu, take over. Thank you, guys. And real quick, I see a Q&A down there. Rashinda, you want to wait till the end, or?
It's up to you. We can.
Yeah, let's just do it at the end.
Okay.
Okay, thank you.
My vote would be let's go to the end. That way we can cut. My vote would be we go to the end. That way we can just kind of knock them all out at one time, opposed to jumping around. But that's just my opinion.
Sounds good.
Okay. Yeah, hey guys, thanks for having me on. My name is Stuart Werba, and I'm with Gulf Coast, same as Rob. I've been here 14 years. You probably have met me at the various shows that we've done. And I personally, as well as I know the whole group, can't thank you guys enough for the deals you guys have sent. This portion is really where I think that the majority of commercial loan brokers really don't understand factoring and the value that it can bring to your portfolio of fee income that you're bringing in. I know a lot of commercial loan brokers love the MCA worlds, big hits up front, you know, $100,000 loan, and you know you're making 15 grand or 20 grand or whatever it may be. Yes, that's not going to be us. I'm not gonna sit here and tell you that that's the type of return you're going to be getting from us. But what brings us the difference, what brings us and makes us different is it's residual income. So we're not here telling you not to focus on, you know, SBAs or MCAs or anything else that you're going to get a big hit up front. But those deals that maybe don't want an MCA, go ahead and give them an opportunity to at least look at factoring. You know, because again, you'll have some businesses that just don't want to pay that high rate for an MCA loan. And then, you know, a lot of the brokers get turned off and go, okay, well, have a nice day. Well, if you just send us a name and a number, that's where the residual commission comes in. We sign each and every one of you up as an independent broker with Gulf Coast. We call it referral source or broker. Broker sometimes gets complicated because they're like, well, I'm not really a broker. But so referral source or broker. And we typically start most people out at 10% monthly on the fees collected for the life of the deal. So if you've got, let's just say, a staffing company that's doing $500,000 a month, and let's say their fees are $5,000, and I don't know what, we'll throw that for math's sake. We're going to pay you $500 a month in perpetuity until they leave us. Now, again, doesn't seem like a lot of money, but if you can go ahead and get, 10 of them on the books, now you're making $5,000 a month for doing nothing. And like I said, it continues to go until they leave. So go back and do your other stuff, but just continue, what do they call mailbox money? Just go back and just collect that check every single month on a deal. I've got brokers that have been with me for 9 years that they probably couldn't even tell you who they're getting paid on, nor would they know the deal or remember the deal, but they have no problem still collecting that check. Because of that, we're looking to maintain long-term relationships where we bring value to the tables because we're a bank. So we're going to be able to offer some of the most competitive rates that other factoring companies just can't touch. And as a result of that, that's why our referral sources or brokers stay with us and continue to send us deals, because they know, and I hate to make this statement, but they know if we can't do it and we're not going to lose a deal on rate, it probably can't be done. So, and Rob can chime into this. We get phone calls all the time of, this is what they have, or this is what they're going to get. Between Rob and I combined, we've got 20 plus years experience in the industry. We know our competition and we know what's out there. And a lot of these pie in the sky deals are just to go ahead and get the deal off the street. And then there's a, I don't want to say bait and switch, but then there's just, oh, well, that was on a 10-day rate. So over 30 days, it's 4 times that, it's 3 times that much, so on and so forth. As far as the broker program, we do all the legwork. All you need to do, and I don't want to say that because, and we've got both ends of the spectrum. I've got brokers that literally will send me a name and a number, and it'll be Steve, call this guy, trucking company. And then I've got other brokers who want to be a part of the entire transaction and will collect all the information. We'll be the front person. We'll sell the rate. We'll sell the deal. We'll sell Gulf Coast. And that's fine too. So it really is just dependent upon how well you know your prospect or your customer and what type of relationship you want to maintain. And like I said, I've got referral sources that will send me 5, 6, 7 leads a week that they'll just forwarding me on a name and a number because either they're buying them or they have cold callers and they don't even get involved because that's not what they're looking for, but they're willing to take the residual income. As far as and I apologize, I'm not on my computer, but it says click here. Rashinde, is that active right now for them to sign up or? Hello?
I'm not sure it is or not.
Okay, so you guys can hear me, right? Okay.
Yeah.
Because Rob, I'm looking at the presentation. It just says the purple link.
Yep.
So
Yep.
I don't know if that's active or not. And I'm like, okay. So if you guys want to sign up for that, like I said, we pay 10%. You would fill that out. I believe there's a W-9 there. You'd send us your banking information. We would upload you into the system, and that is a one-time enrollment. We don't need that for every deal. Once that's submitted, you're protected from there on out. And I know Rob had touched on it before, but we do these shows together. We do have a large presence with Gulf Coast SBA. If you are signed up with them, that is different than us. I just want to be very clear. And Mike Pearson, who's always at the shows with us from the SBA, great guy, will certainly send us referrals when you guys send them in. But I just want to be clear that we are different, even though you say, oh, I sent it into, Rob or so-and-so and you didn't get paid. We do need our own agreement on file. Next slide. The broker playbook. What's important to us, and I know one of the things that frustrates Rob and myself when we get deals in from referral sources / brokers, we have zero interest in looking at bank statements. Bank statements are really reserved for MCAs For us, the main thing we want is the AR aging report and to see the quality of the receivables and to also see who the receivables are coming from, or the debtors, as we call them. Showing us 6 months of bank statements does us, I mean, we keep it for the file, but we're not going to start a deal by getting that unless we have an AR aging. And if it's a startup, just a short bio or a resume. Again, not a 30-page business plan, but just, you know, he worked for Jimmy's Staffing for 20 years. He went out on his own. He has these 3 accounts. He's starting next week. That's fine. And that goes back to the less important piece of it. You know, the individual operating history, the financial covenants. We don't have that. I do notice one of the items on here is individual credit. The only thing that is a true non-starter for us is back taxes and back child support. Back child support is 100% non-starter. You don't even have to send it in if they have that. Back taxes, if they're in a payment plan and they're current and we've got a copy of the plan, we will look at it, but it's going to take a lot more to get us over the top. But that's typically the first 2 things that I tell people. If you know you have a tax lien and you haven't had any sort of agreement put in place, we're not going to do the deal. We're not going to negotiate for you. We're not, that's not what we do. As far as clients to avoid, the construction and the progress billing kind of go hand in hand. We can do construction related type of transactions. And when I say that, I mean, like I've got a door handle manufacturer that sells to the construction industry. I've had a woodworking company that sells to the construction industry. As far as, a subcontractor that's laying sheetrock, that's got, he's a sub underneath of the prime, there's progress pay, there's retainage. We're not going to really get into that arena, as well as anything that's a bonded type of job. If there's bonding in place, again, we're not going to get into it. It doesn't mean, don't pick up the phone and call Rob or I if you have a question, because we certainly will be more than happy to take the 5 minutes of our time to listen to it and see if we can fit it. But as far as you guys chasing business, or as you guys, really looking at it, that those are industries that just are not, that don't really go to factoring. The other side of it is the insurance medical billing. And the main reason for that is, and as we all know this with health insurance, you go and they bill for $1 million and they wind up paying 125. So if we've advanced 75% of that $1 million, we're upside down and we're never going to see that money again. So again, that's not really, that's a non-starter too. But as far as within the medical industry, I've got several medical transport companies. I've got companies that are, selling into the, the equipment associated with the medical industry. It's just that insurance piece that we really won't touch. We are going to be anywhere between 80%, and that 100% is a little misleading, only because in the trucking world, we will take our fee off the top and we will then fund 100% of the balance. So if our fee is 2% on $1,000 invoice, we're going to advance $980, which in turn is 100% financing, but they're not getting 100% because we're taking our fee off of the top. As far as rate structure, the larger the deals, the more complex of the pricing. And when I say that, I mean not to make it difficult for the customer, but if you've got a $3 or $4 million facility, you're not going to get a fixed rate. That's going to have a variable rate component just to protect us in the event of interest rate hikes like we've seen over the past 18 months. On the smaller deals, we make it very simplistic for the customer. It's a flat rate, 2%, 1.5%, 0.75% for every 15 days. We're going to tailor it to meet the customer's needs. And it's a set, this is what it's going to be for every 30, be for a 90-day contract, so on and so forth. Our contracts range anywhere from 90 days to 12 months. I mean, obviously we can go out past 12 months, but typically it's 90 days to 12 months. When I speak to people and they're like, well, if I can get a 90-day, why would I go 12 months? And the main reason why that is because at the time of renewal, if we need to raise those rates, we can certainly go ahead and do that. And on a 12-month, if the rates go up, we can raise the rates during the term of a contract. But since I've been here, I don't know that we've ever done it. And that's thousands of deals that we've seen. So next slide.
Actually, can I stop real quick?
Sure.
And if you, Rashinda, can you go back real quick? Not to be, but the very top, the important, the first position lien, we do need that. You're probably going to see a lot of clients that may already have lines of credit with their current bank. So just keep in mind, let us know that if you do know they have something like that, or other loans or other MCAs, because we will need first position lien on the receivables. So please find out, if you can.
Yeah, and to go to Rob's point, and I apologize, Rob. We do need a first on receivables. If there are MCAs in place, those will need to be paid off. So even if the MCA says we'll subordinate the receivables to us, we're still not going to do the deal. And that is that's a non-starter. So if there's 4 or 5 MCAs in place, they either have to have enough AR to pay all of them off or pay them all off. But regardless if they would be subordinated or not, we would do the deal.
And then a lot of clients ask, even clients current, they're factoring with somebody else now and they call us and they want to factor with us. Keep in mind that you can only have one factoring company. And again, that's because of that first lien position. So if they're already factoring, we can buy the other factoring company out. Keep that in mind. But yeah, a client can only have one factor at a time.
Right. And to go to that, Rob's point, if you speak to somebody and they're currently factoring right now, and we hear this all the time. Oh, I can leave at any time. My contract expired 6 months ago. Very few contracts actually truly expire and you just stay on month to month. Typically, they will all renew for an additional 12 or 24 month or 6 month time period. So if you're speaking to somebody that's got a factoring line in place and they're looking to switch, they're looking for a better rate, they're looking for expansion, whatever it may be, first and foremost, get a copy of their factoring agreement and review it. Because, I can't tell you how many deals weekly, and I'm sure Rob will agree with me. Oh, I can leave at any time. I expired in February of this year. Yeah, well, you've also renewed in February of this year. So don't go down a path of collecting paperwork for something that's just never going to happen. And a lot of the contracts, they are so expensive to get out of that regardless, even if you can save them, cut their rate in half, there's still not going to be enough savings to cover what the exit penalty would be. So again, I wouldn't spend all that much time on that. So we'll go to the benefits of GCBC. We've got the ability to move quickly, pre-approval. I would say it's even less than 24 hours. And yes, we can fund, with certain industries, we can fund same day. And we've done it. The majority of the deals, depending upon the paperwork, is going to be anywhere between, 72 to 72 hours to a week, 5 days, 4 days. Again, it depends upon the complexity, what the paperwork looks like, the customers, so on and so forth. Our rates, and we're going to hit on this, and if you do business with us, our rates are always going to be substantially less than the competition just because we are the actual bank and we don't borrow our money. Because we are a bank, we're regulated, so we're held to a little bit higher of a standard. Our policies are in place. They're streamlined. We know what they are. We don't have to go back and get exemptions and, look at this or look at that, so on and so forth. We know we can do it. We say we can do it. Whereas if someone that you've got a specialized deal and you bring it to, ABC factoring and they say, oh, I got to, run this by, that means they have to look at their line and they have to read what they're actually able to lend on. They might not be able to lend more than 20%, or they might not lend in that industry, and so on and so forth. So we don't, we have those constraints, but we know what they are. And when it's approved, it's approved. Like I said, we touched on the contract, 90 to 12 months. We calculate from funding date, not from invoice date. That's big in this industry because if someone funds, let's say every 2 weeks, theoretically, they've held on to invoices for as much as 14 days and they haven't paid any fees on those. The clock will start the day we send the money out the door. Again, for companies that fund every day, that's irrelevant, but we do have companies that'll fund once a week, or companies that bill every 30 days, they're funding once a month, so on and so forth. We typically don't have monthly minimums. We don't have to require that you factor every invoice. We don't require that you factor every customer. In fact, on the way, while I'm in my car while I was driving, I spoke to someone that was with a competitor, and their rate was 2.5%, but they had a monthly minimum of 150,000. And in the specific industry that they're in, rates are down, and they physically can't get to 150,000. So their rate then went to 5%. So those are the type of things that you have to look at. We don't have those monthly minimums. We don't have those issues. We provide a full online system. Your clients will have access 24 hours a day, 7 days a week. They'll have access to their account. They'll be able to see by their customer, by the invoice date, the amount of fees associated with that customer, with that invoice specifically, so on and so forth. They will also have a dedicated account rep, not Rob or myself. They will have somebody in the office that physically processes their fundings. We are always here to help, but as far as the individual fundings of these things, Rob and we can't even see the system. So they will have a dedicated person in the office that will have access to their account, that can pull up their invoices, their payments, and so on, and their collections, and so on and so forth. And then at the bottom of it, contact us, last slide. That's Meg Robertson. She's our national sales manager. She's been here, I believe, 16 years. She's forgotten more about factoring than I'll ever know. She's a whiz, and she's an incredible asset to have on the team. And then you've got Rob and myself. So I will turn it back, I guess, over to Rob, or I can't see if there's questions, so I apologize, but I'll turn it back over to Rob if you want to chime in, and we can kind of go from there.
Yeah. Does anybody have any questions or?
Just as a reminder, if you have questions, please type them in the Q&A box and we'll get them answered. There are a couple of questions so far. That what is the ratio of loan amount to asset appraisal amount?
Based on what it is, I believe that's around 50.
Sorry, what?
Go ahead, Rob.
I was going to say, Stu, is it around 50% of the appraised value?
Yeah, I mean, it's going to really also depend upon the industry, what it is you're referring to, credit quality, so on and so forth. So I don't think there's an absolute answer to that. I'm not trying to go in circles with you, but it depends upon down payment, industry, longevity of the company, lifespan of the equipment, so on and so forth.
And then Brian, no cannabis. We don't obviously factor any of that type of industry. Now we could potentially maybe look at the equipment, but as far as the factoring is concerned, that's a no.
Okay.
And again, if anybody has any questions after this, just give us a call. Stu's in the car. I'm here. So if you have any questions or something comes up later, just give us a holler. We're going to pick up the phone and talk. So if you can't think of anything now, or, you have questions that come up later on deals that you're already looking at, just go ahead and give us a call later on. We'll be here. We're not going anywhere.
Well, it looks like there's no questions right now, so we'll go ahead and wrap things up. I want to say a big thanks to all our participants and especially our valued funding source member and gold sponsor, Gulf Coast Business Credit. Thanks for a great job, Stuart and Robert. We invite everyone to meet with Gulf Coast Business Credit in person at the Commercial Financing Expo coming up this September in Orlando. Thanks again and have a great day, everyone.
Thank you.
Thanks, guys. Thank you.